Welcome to the deep dive. Today, we're going to be diving into the world of flexible workspaces through the lens of AWFIS Space Solutions Ltd, an Indian company that's
Yeah.
making some pretty big waves in this sector. Have got their official company filings and investor presentation, and even some suggested podcast questions, which I always think is a good sign. When a company's suggesting questions, it seems like they're being transparent.
Yeah, I think that's a really good point. Transparency is always something to look for, especially when you're digging into financials.
For sure. So our mission today is to really unpack AWFIS's recent performance, get a grasp of their growth strategy, and understand their position in the evolving landscape of co-working spaces in India.
Sounds good.
So we'll start with the basics. AWFIS is the largest player in the Indian flexible workspace market right now. They have over 110,000 operational seats spread across 180 centers in 18 major cities. That's a lot. And they're aiming for even more, a whopping 135,000 seats by March 2025.
Wow, that's ambitious. Expansion on that scale requires a very solid strategy. How are they planning to achieve this growth?
Well, they've got this really clever approach. They call it the managed aggregation model. Instead of owning all the properties, they partner with space owners, and they share both the costs and the profits. So it's kind of like a win-win collaboration, where AWFIS brings their expertise in designing and managing the workspaces, and the space owners provide the real estate.
That's really smart, especially in India's real estate market, which can be pretty volatile. Property prices fluctuate quite a bit, so this model really allows them to mitigate risk and scale quickly without tying up a ton of capital in real estate.
Yeah, you hit the nail on the head. And this isn't just some theory, this is actually how they're succeeding. This model accounts for 67% of their seats and 64% of their centers operate under this model.
So they're putting their money where their mouth is. And how's this translating into occupancy rates? Are they actually managing to fill all these spaces?
They are. Their blended occupancy rate, which basically means the average across all their centers, is a healthy 73%. But here's where it gets interesting. The centers that have been running for over 12 months boast an even higher occupancy of 84%.
That's impressive. It seems like they've struck a good balance between aggressive growth and maintaining profitability.
They have. And their chairman and managing director, Amit Ramani, seems pretty happy with their recent performance. He's been highlighting their impressive year-on-year growth, with revenue surging by 40% to reach 292 crore rupees.
So strong revenue growth, but what about profitability? Are they converting that into actual profit?
Well, their operational EBITDA, which basically measures their profit from their core operations, witnessed a remarkable 67% year-on-year jump, reaching 100 crore rupees.
So not just growing, but becoming more profitable as they scale? That's really a key indicator of a healthy and sustainable business model.
It is. And their EBITDA margin, which is basically how much profit they make for every rupee of revenue, that's also seen a significant boost. It now stands at a healthy 34.3%, which is a 550 basis point improvement from the previous year.
Wow, those figures paint a really positive picture. It seems like their strategic approach is paying off, but what's fueling this remarkable growth? Is it just geographic expansion, or are there other factors at play?
Well, expansion's definitely a key part of their strategy. They're not content with just being in major Tier 1 cities. They're also strategically moving into new micro-markets within those cities. And they're aggressively targeting emerging Tier 2 cities like Guwahati.
Right, so that new center in Guwahati that was in their investor presentation, they're tapping into the rising demand for flexible workspaces in smaller cities.
Yeah, and it's working. Their footprint in Tier 2 cities has grown by 43% just since September 2023.
Wow, that's significant. But I'm guessing geographic expansion isn't their only growth driver. They must be doing something else to stand out in such a competitive market.
You're right. AWFIS is going beyond just providing work desks and Wi-Fi. They're focused on innovation and creating these client-centric solutions that cater to the evolving needs of modern professionals. For instance, they recently launched Elite by Office, which is this luxury workspace concept in Hyderabad.
Elite by Office. That sounds interesting. What makes that stand out?
Well, it's like a premium experience. It blends the comfort of like a high-end hotel with a productivity-focused environment. They've got executive suites, biophilic pods, which are workspaces designed to incorporate elements of nature, meeting rooms, podcast rooms, focus rooms, and even wellness spaces.
So they're targeting a more discerning clientele who are looking for more than just a place to plug in their laptops. It really speaks volumes about their understanding of evolving workplace trends and the needs of today's professionals.
Exactly. They're not just about providing space. They're creating an ecosystem where people can thrive. It's a powerful value proposition.
Yeah.
But let's get into the nitty-gritty of their financial performance now and take a closer look at what their numbers are actually telling us.
Let's do it.
So let's start with their revenue from operations. According to their unaudited, standalone, and consolidated financial statements, their revenue has seen some pretty impressive growth, both for the quarter and for the half year.
Okay, so we know from the investor presentation that their revenue grew by 40% year on year in Q2. Is that reflected in the official filings?
It is. The actual consolidated revenue figure from operations for the quarter comes in slightly higher, at 292.18 crore rupees, compared to the rounded figure of 292 crore rupees mentioned in the investor presentation.
Right, so it's always good to cross-reference the sources. What about the half-year figures?
So for the first 6 months of the financial year, their consolidated revenue from operations reached 550.13 crore rupees. It's a considerable jump. And it's not just the revenue that's looking good. Their operating EBITDA and margin have also shown significant improvement.
Okay, so we already talked about their impressive EBITDA growth. But what about their overall profitability? Are they in the black?
They are. They've actually achieved a significant turnaround. They've shifted from a loss to a profit, excluding exceptional items.
That's a pretty big achievement, especially when you consider the competitive landscape and the economic uncertainties we've seen over the past year.
Yeah, it is.
But you mentioned exceptional items. What were those about?
Right. So remember how we were talking about how AWFIS has diverse business lines? Well, during this quarter, they made a strategic decision to divest their facility management division, AWFIS Care. And this divestiture had a pretty big impact on their financials, but in a good way.
Okay, that makes sense. Divesting non-core business units can often unlock value and allow companies to really focus on their strengths. So how did the divestiture impact their financials?
Well, they received 275 million rupees from the sale, which is reflected in their exceptional items, and this one-time gain really contributed to their shift from loss to profit.
Okay, so it's important to analyze their performance, excluding this one-time gain, to get a clear picture of their underlying profitability. But even without it, their shift to profit really highlights the effectiveness of their growth strategy.
Exactly. It shows their core business is performing well and generating sustainable profits.
So speaking of their financial maneuvers, they recently went public, right? Did their IPO proceeds play a role in their financial performance this quarter?
That's a good question. Their IPO actually took place in the previous quarter, ending June 2024, and they raised around 12,280 million rupees from the fresh issue of shares.
That's a significant inflow of capital. How have they been utilizing these proceeds?
Well, the company filings actually provide a really detailed breakdown of how they've been deploying this capital. They've allocated funds to invest in new centers, bolster their working capital, and cover general corporate purposes.
So it seems like they're managing their finances prudently and strategically investing that IPO capital to support their growth trajectory. It'll be interesting to track how these investments contribute to their future success. But I think we've covered a lot of ground in this first part of our deep dive. What stands out to you so far?
Honestly, I'm really impressed with their dynamic growth strategy. They're not just riding the wave of this flexible workspace trend. They're actively shaping it with innovative solutions like the managed aggregation model. And they're focused on creating these unique client-centric experiences, like Elite by Office.
Yeah, their financial performance is solid, and their commitment to innovation is evident. They're definitely a company to watch. But we've only just scratched the surface. In part 2, we'll delve deeper into their design and build business and explore the broader market dynamics that are shaping the future of workspaces. Stay tuned for more.
So welcome back to the deep dive.
When we left off, we were just about to explore AWFIS's design and build business. What exactly does that entail?
Yeah, so this is a really fascinating aspect of their business.
Yeah.
That goes beyond just creating and managing workspaces. They call it Office Transform. And it's essentially their construction and fit-out arm. So they're leveraging their expertise to help other companies build out their dream offices and tap into this whole new revenue stream.
So they're not just providing workspaces, they're helping others to create them. That's a smart way to diversify their offerings and really capitalize on their design and operational know-how.
Exactly. And it's proving to be quite a successful venture. Their investor presentation highlights that they've already secured deals worth 175 crore rupees in just the first half of FY25.
Wow, that's impressive. What kind of clients are they attracting for these design and build projects?
Well, they're working with a diverse range of clients, from existing landlords to companies across various sectors like IT, BFSI, telecom. and even those setting up global capability centers.
So it seems like their expertise is transferable across industries. They're not just catering to a specific niche, but rather meeting the evolving needs of a broader market. This could be a significant growth driver for them, especially as the demand for flexible and tailored office spaces continues to rise.
Absolutely. And this success of their design and build business actually reflects a larger trend that we're seeing in India. The demand for flexible workspaces is booming,
Yeah.
and AWFIS is very strategically positioned to capitalize on this wave.
So what are the key factors driving this surge in demand? I mean, in India specifically.
Well, there are several forces at play. First, you've got the very nature of work itself is changing. Remote work and hybrid models are becoming increasingly popular, and companies are really seeking more agile and flexible workspace solutions that can adapt to these new ways of working.
So it makes sense that companies would want to move away from traditional long leases
And
and inflexible office spaces in favor of more dynamic options.
Exactly. Then you've got the rise of startups and SMEs. These businesses require workspaces that can scale with their growth, and they're often hesitant to commit to large upfront investments in traditional office spaces. So flexible workspaces offer them the agility and cost-effectiveness they need to thrive.
So it's not just about changing work styles, but also about providing solutions for businesses at different stages of growth.
Right. And then you can't forget the changing preferences of the workforce itself, particularly millennials and Gen Z. They're looking for workspaces that offer more than just a desk and a chair.
Right. They want a workspace that aligns with their lifestyle and values.
Exactly. They crave a sense of community, collaboration, and even a bit of fun in their work environment.
And AWFIS seems to be catering to this need quite effectively, with their focus on design, amenities, and those biophilic pods you mentioned earlier. They're creating spaces that foster creativity, productivity, and a sense of well-being.
Precisely. And this is why their management is so optimistic about the future. They believe that their commitment to innovation, client-centric solutions, and operational efficiency will continue to drive their success.
It seems like a winning combination. But what about the competition? Are there other players vying for a slice of this growing pie?
Oh, of course. There's always competition in a thriving market. However, AWFIS currently holds a pretty commanding lead in the Indian flexible workspace landscape. I mean, they're the largest player by far. And their innovative model, strong financial performance, and diverse offerings really give them a significant edge.
True. But it's important to remember that markets can shift quickly. New players can emerge, and existing players can adapt their strategies. So AWFIS can't afford to become complacent.
Well, they seem to be aware of the competitive landscape,
Hmm.
and they're constantly evolving and innovating to stay ahead of the curve.
That's good to hear. So we've covered their impressive financial performance, their ambitious expansion plans, their innovative design and build business, and the favorable market dynamics that are propelling their growth. But how does all of this connect to the bigger picture?
I think what we're seeing with AWFIS is like a microcosm of a larger transformation in the way we work and live. The traditional 9-to-5 office model is becoming increasingly outdated. Companies and individuals alike are seeking more flexible and agile solutions that cater to their evolving needs and lifestyles.
It's about creating workspaces that foster collaboration, innovation, and well-being. As the lines between work and life continue to blur, these workspaces need to offer a more holistic and enriching experience. That goes beyond just providing a place to get work done.
And AWFIS seems to understand this shift. They're not just adapting, they're leading the charge, creating innovative and inspiring workspaces that are redefining the very concept of office.
And that's precisely why their story is so compelling. They're a symbol of how the workplace is evolving to meet the changing needs of businesses and individuals alike. But before we get too carried away with the future of work, let's circle back to AWFIS's financials for a moment. We've touched on their revenue and EBITDA. But what about their cash flow situation and how they're managing costs in a potentially inflationary environment?
That's a crucial aspect to consider. And we'll unpack their cash flow management and cost optimization strategies. In part 3 of our deep dive, stay tuned to explore the financial bedrock that underpins AWFIS's success story. Welcome back to the deep dive. We've explored AWFIS's impressive growth strategy, their innovative approach to workspaces, and of course their solid financial performance. But a strong business isn't just built on, expansion and innovation. It requires a solid financial foundation. So let's shift our focus now to examine how AWFIS is managing its cash flow. and navigating the challenges of a potentially inflationary environment.
That's a really important point. Cash flow is the lifeblood of any business, especially one that's growing as rapidly as AWFIS. So let's look at their consolidated cash flow statement to see how they're generating and utilizing cash.
Yeah, so looking at their cash flow from operations, for the first half of FY25, they generated a pretty robust 194 crore rupees. That's a significant jump from the 117 crore rupees they generated during the same period last year.
That's a great sign. A healthy cash flow from operations indicates that their core business is generating enough cash to support their operations and fuel their growth initiatives. It means they're not overly reliant on external financing or debt to fund their expansion.
Right. And this strong cash flow from operations gives them the flexibility to invest in new opportunities, to weather economic uncertainties, and to continue on their growth trajectory. But let's kind of break down their cash flow management a bit further. Their cash flow statement reveals some interesting details about how they're managing their working capital, which is essentially the funds they need to manage their day-to-day operations.
Right, and working capital management is so important, especially for a growing business. How efficiently a company manages its working capital can have a huge impact on its profitability and liquidity.
For sure. And AWFIS seems to be doing a good job in this area. They've actually seen a positive swing in their trade receivables, which basically means they're collecting payments from their clients more efficiently.
Okay, that's great. Efficiently collecting receivables really improves their cash flow and reduces their risk of bad debts.
Exactly. Now, speaking of managing risks, one of the suggested podcast questions we received specifically asked about how AWFIS is handling rising operating costs and inflationary pressures. And while their financial statements don't explicitly address inflation, we can kind of glean some insights from their cost structure and their strategic initiatives.
Yeah, that's a good point. Inflation is a concern for businesses across all industries, so it's good to understand how AWFIS is mitigating those risks.
Well, their managed aggregation model, which we talked about earlier, plays a key role in managing costs. By sharing costs with space owners, they're effectively mitigating some of the risks associated with rising real estate prices, which is a major component of their operating expenses.
So that's a proactive approach to cost management. It gives them a buffer against those inflationary pressures and helps them maintain profitability, even when real estate costs are going up.
Right. And they're not just relying on their business model. They're also likely leveraging their scale to negotiate favorable terms with vendors and suppliers, to further optimize their cost structure.
Yeah, and negotiating power is definitely an advantage of being the biggest player in the market.
Exactly. And their investor presentation really emphasizes their focus on operational efficiency. So it seems like they're constantly looking for ways to streamline processes, automate tasks, and implement cost-saving measures across their operations.
So it sounds like a multifaceted approach to cost management. They're not just reacting to those external pressures, but they're being proactive about seeking ways to control costs and maintain a healthy margin.
Yeah. So while we don't have, specific details on their inflation mitigation strategies, their overall approach suggests that they're well prepared to navigate these challenges. They're focused on cost sharing, operational efficiency, and those strategic partnerships provides a pretty robust framework for managing costs and maintaining profitability in a potentially inflationary environment.
I agree. It seems like they're really taking a holistic approach to cost management. And considering both internal and external factors, that's a really crucial part of their sustained growth and success.
Well, we've covered a lot of ground in this deep dive, exploring AWFIS's financial performance, growth strategy, innovative business model, and their approach to managing costs and navigating these market challenges. So what are your final thoughts on AWFIS?
I'm really impressed by them. They have a deep understanding of the market dynamics, a commitment to innovation, and a solid financial foundation. I think their strategic approach, combined with their really strong execution, positions them as a leader. In the Indian flexible workspace market, they're not just adapting to change, they're shaping the future of the industry.
I totally agree. It's definitely made me think more about the broader implications of this shift towards these flexible workspaces. It's clear that this trend is really reshaping the way we work and live. And AWFIS is at the forefront of this whole transformation. Their story isn't just about one company's success, it's a glimpse into the future of work itself.
Absolutely. AWFIS is a great example of a company that's not just riding the wave, but actively shaping it. Their innovative solutions, client-centric approach, and strong financial performance make them a really compelling case study for anyone who's interested in the evolution of the workspace.
Well, thank you for joining us on this deep dive into the world of AWFIS Space Solutions. We hope you've gained some valuable insights into their business, their financials, and the broader trends that are shaping the future of workspaces.
It's been a pleasure. Until next time, keep diving deep and stay curious.